Welcome back. You're watching World Insight coming to you live from Beijing. Now we turn to the new progress within China's property market. A number of cities have put out tougher regulations in the past week on mortgage and housing purchases. The new measures range from increasing down payment requirements to limiting the size of apartments investors are allowed to buy. We will go to our panel later for the analysis, but first, take a look at what really happened.
A new round of measures to cool the housing market. 20 cities have issued new regulations in the past 9 days. The list includes first-tier cities such as Beijing and Shanghai. In Beijing, the minimum down payment for people buying a single home to live in is now 35%. In Guangzhou, local residents can purchase a maximum of 2 properties, with the measures stipulating non-local residents can only purchase 1 property. The new Shanghai policy has ruled that the real estate must be registered under the statewide network system, with each unit being assigned a unique number.
The system provides national housing market database for differentiated restriction policymakers in major, even second-tier cities. Also, it paves the way for imposing real estate tax in the future.
Many second-tier cities have also rolled out new plans. These include limiting the size of homes, improving the supply of medium and low-priced housing, and introducing a circuit breaker mechanism for land purchases.
The new policies target real estate companies. Those who have healthy demand will not be affected this time. And there are some restrictions mentioned in the new plan in a bid to curb speculative buying.
Official data shows that in the first 9 months of this year, home prices in 100 major Chinese cities rose nearly 15% accumulatively. Meanwhile, residents' debt-to-income ratio was almost 0.5% higher than in Japan at the peak of its property bubble.
The list of cities will grow rapidly soon. I believe in October or the fourth quarter, more first and second-tier cities will issue curbs.
The measures are expected to lead to lower trading volume, but there are also concerns about the diminishing effectiveness of property curbs, which target the syndrome rather than the causes behind the property market overheating.
Well, for more discussion about China's real estate recent development, we are joined here in Beijing. Professor Baocheng, Dean of the Center of International Business Ethics at the University of International Business and Economics, and also joining us from Hong Kong, Mr. Xiao Geng, Professor of Finance and Public Policy, Hong Kong University. Welcome to two of you, gentlemen. Professors, let's start by asking this question. Will the common people really likely to benefit from this new rounds of policies that just put out by about 20 cities in China? Professor Xiao, why don't we begin with you?
Well, I think people will benefit in the sense that they will have some time to cool down, to think about the real value of the property. But the policy mainly are dealing with the speculators.
Professor Liu?
Well, I don't think they even have the time to cool down their mind before the market really can cool down, because the market is getting red hot, and today's high price will be the starting point for tomorrow. So for each round of the policy intended to curb the housing prices, but it triggers a sense of urgency. If I don't get it at this price today, they won't be available. Now, if you go to the real estate sellers, and you virtually need to bribe them to get really a contract signed. So,
did you just do it today?
Well, I've been observing all this. So.
All right. Let me ask you, why? We've been talking about the reasons. Some were suggesting there's really hard demand when it comes to housing, particularly in middle and the metropolitan cities for the people. And there's also other talking about lack of investment opportunities into other options, for example, stock market and some of the others. And therefore, people put all their money into the real estate. But some suggest, Professor Liu, that the real estate prices, particularly in metropolitan cities, in areas that people want to have a property in, has already reached such a level that common folks with whole lives of savings will not even to be afforded. So is that really common folks that we are talking about? As Professor Xiao just mentioned, it is more speculators.
Well, it really there's no consensus over what is defined as speculators. If I buy a house and then I just rent it out, so is that really a speculation? So it's more of investment. So and then for the fundamentals, there is really a demand is there, which is really not comparable with what is going on in Japan or in Detroit. Because every year we have more than 20 million people that getting urbanized, and in the meantime the sort of income is really getting higher, and particularly the wealth concentration is getting faster than before. So now the real estate developers, they are just skimming the type of people which really have the money.
All right, you're saying, Professor Liu, if I could reinterpret what you just said in a very blunt words, that is, no matter what kinds of policies you put out right now, most of them are not likely to serve the purpose as they claimed. So let me go to you, Professor Xiao. Do you really agree?
Well, I think the short-term measures are reducing demand, and especially demand from people who actually are buying 2 or 3 apartments. So in that sense, the measures actually will help the local people who have never buy any property. So their demand is not restricted. So they now have opportunity, at least better than before. But I think in the long run, because the demand are rising, more people are moving into first-tier cities. So the local government needs to provide more supply. But I think property development takes time. So the short-term measures, I think, will actually help to cool down a little bit. And especially to reduce transactions, reduce demand from outside cities.
Professor Liu, respond?
Well, even if you really raise the mortgage rate whatsoever, from 40% to 50%, people really can now they can really have a higher level of leverage, and money is available. So liquidity is very high. So that doesn't really help substantially to improve the market picture. So that's my basic observation. Actually, the last 4 rounds of policies, the intending to bring down the housing price, really serve the opposite direction.
Professor Xiao, do you agree with that?
Well, I think it depends on how the government will do next.
Explain.
I think in the past, one problem is that the local government has not really increased the supply or relaxed the height of the buildings. China does not lack of land if they build like Hong Kong, 30 floors, 50 floors. So I think the government should take some lessons from this episode of rising prices. But I think the temporary measures definitely will reduce the short-term demand, both from the quota and also from the increase in the down payment, and those are all real constraints directly reducing demand and will temporarily reduce the transaction volume, and also will calm down price in the short run.
I see.
But I agree, in the long run, it's a different story. If supply are not increasing enough, then the price will continue to rise next round. Yeah.
People might not really like it, but it is a phenomenon about the Chinese economy that the price of the real estate market, in a way indicating, or the sales of the real estate when it comes to the amount, indicating where Chinese economy is and how much GDP percent of growth this economy is likely to enjoy. It seems there's to be some kinds of link. Professor Liu, what do you make of this round of policy and the current apparent efforts by the government to dampen at least a bit the price, the ever-rising price?
Well, if the demand is there, you can only delay with this type of measures, but you cannot eliminate this type of demand. So that's number one. Number two is that, okay, now I have money and I can leverage. So I cannot invest in stock because I already burned a big hole in my pocket. And not many people really have the knowledge and skill to invest real estate overseas. And now, doing the real economy, setting up real plant in industrial parks, it is really not there to make a lot of money. And plus, you have all the trouble dealing with labor relations, paying all the wages, whatsoever. So real estate is a sure way. So it's like buying insurance. And right now, people in my age now, they gather the money to buy a house, just for retirement.
Right.
package.
Well, we understand that. You have already debated about that earlier. But the question is, what does all of these recent rounds of policies and its implications on the real estate market mean generally for the Chinese economy? Because many are pointing to real estate markets in China over the years as one important indicator about the Chinese economy. Professor Liu, very briefly for me.
I think it's just there to serve the sentimental value. I do not see that, even if the money is squeezed out, will that go to the real economy? Will that go to the third or fourth tier cities? I do not think so. So you can only postpone the demand for the first and second tier city, but the money one day will be still returned to the first and second tier cities.
Let me shape the question in another way to you, Professor Xiao. How should we read all the indicators coming from China's real estate market and the policies related to it in an effort to understand China's overall economic health at this moment?
Well, I think the rise in the price in the first and second tier cities are good signs in the sense that people are now more confident about economic growth in these regions. But at the same time, the property price in the third tier and fourth tier in the remote areas, they are not increasing much, and some are still falling. So I think the market price actually are quite rational, and the economy is actually moving towards a more balanced situation in the sense that when people move to first-tier cities, the price goes up, and that gives a signal. And actually rational signal to both the government and also to the market. So I actually think that this is the way the market works. So in a way, this is indication that the economy on the whole are actually getting better.
Professor Xiao, you probably have more knowledge than I do about the recent developments of some of the most well-known real estate developers. Take Wanda, for example, one of the most established Chinese businesses, even in the world. It abandoned partly its real estate trades to concentrate on cultural development and some of the other areas. Soho, also one of those quite unique real estate developer from China, has more moving to providing venues for entrepreneurs rather than emphasizing on developing more real estate projects. So you see these developers changing their directions. The question is, what are we going to see in the next few years? Are we still going to see a repeat of real estate markets economy in China? Or are we going to see only temporarily what the recent phenomena are, and they continue to move to the real restructuring of the economy?
Well, I think for those really big developers, they already invested quite a lot in different parts of China. And for them, it's very important to diversify into complementary, industries like entertainment and also you mentioned, innovation, all those culture in the industry sectors. So for them, it's very rational. But for the whole economy, I think the real estate will still be very, very important because that's basically the case for all the major cities around the world. It's just that the distribution of property, will have to be compatible with the distribution of the population. The Chinese people are moving around, quite a lot recently, and that is creating challenges to both developers and the local government, and also investors as well. Because that it's very difficult to predict where people, will work and live, where companies are moving to. So that I think is a market signal, which we need to pay attention, and also we need a way to collect data to monitor that process, so that the supply of land and also the urban planning, will have to be more compatible with the market trend.
All right. Before we go, one final question for both of you, and it's an extremely important question. Let the market play a decisive role. That has been a slogan coming from the Economic Conference of the Chinese Communist Party. And the question is that going to be true when it comes to real estate market? Professor Liu, what do you think? What is likely to be the role of the market, the role of the government, once again, as we mentioned government so many times today in the discussion, and also the demand and feelings of the common folks?
Well, I think for commercial real estate, the patriarchal type of operation by the government, despite all the good intentions, it's really a mission impossible. But they can really handle more on the economy housing, where this is really the tax dollars to help those homeless people, or people who live in shanty houses. So there should be a clear line and different set of policy to be applied to commercial housing or to welfare housing.
How do you see it, the role of the government, Professor Xiao?
Well, I think the market is already playing a dominant role in the property market, but the government needs to play a more useful role, in two senses. And one is to protect, some of the low-income people, like what the government is doing right now. But more importantly, they need to also read the market signals by providing enough land in those places where people are all want to move to. That's really the key. The land supply in the major first-tier cities, they are not compatible with the population density there.
Well, a lot to discuss when it comes to China's real estate market always, but for now, we want to thank both of you gentlemen for being with us and sharing your insights. Professor Xiao Geng from University of Hong Kong, and also Professor Liu Baocheng from the University of International Business and Economics. Really appreciate gentlemen for being with us. Thank you so much.